Can you explain what is PolicyWoke?
Okay, why not we start with the name?
Okay.
Okay, so policy and woke. Okay, so policy, why we are talking about policy, we deal with second-hand insurance policies. So this explains why we have policy.
Yeah.
But for woke, there's actually two meanings. Okay, one is because the policies are because people are asleep. So we are there to wake them up.
So, what do you mean by wake them up? What exactly do you do with these policies?
We will actually pass it to the second-hand insurance policies to people who actually value and understand them.
Oh, okay. Yeah. So, in a sense, you are kind of like a middleman.
Yes,
you are trying to sort of find a buyer and a seller for these policies in the end and match them.
Yes, correct.
Yeah. Which is actually very interesting because the first time I think Jimmy approached me, I didn't know this existed in Singapore. Yeah, I think the Singapore industry in general does not know that you can actually let go of your policies in a later time frame. They thought, oh, the policy is either I hold on all the way or I surrender it, right?
Yes, correct. That is actually the majority. Okay, the reason why it's not so widely known. Okay, why not we compare it to the United Kingdom? Okay, over there.
Don't worry.
Over there, in the United Kingdom, it is regulated by their authorities that all insurance policies must include this line saying that they can actually resell their policies in the event that they cannot service it any longer.
Okay.
So obviously with that statement and the awareness which allows all consumers to know that they can actually have a third option, enables them to know more. So in Singapore, we currently do not have this. So it's not widely known currently.
Why is it Singapore doesn't have this? Is it just because it's not practiced or not by law? They don't enforce it. That's why nobody puts it.
I would say that it's not practiced currently much, and for the regulators to come up with guidelines, they need to recognize the industry. So currently they feel that the industry is still very small.
Okay.
So there's not much let's say buying and selling. So they don't intend to regulate for now also.
Okay. But is it because maybe insurance companies are afraid, like afraid that buying and selling might hurt their bottom line because if you buy and sell, then people cannot buy more new policies, right?
I would say that's a myth.
Okay.
Because for insurance, there is always a need.
Yeah.
Yes. And for this kind of second-hand insurance, right? They are more viewed as investment vehicle. That's all. They do not have much insurance element in it because the insured is not you yourself. It is someone else.
Okay. So, for example, if I am a client that I have insurance policy that I want to let go of, what would you do? Like if I were to approach you, what would you first advise me, kind of thing?
Okay. Number one, we wish to understand why do you want to, let's say, terminate or surrender the policy first. Because I think there are many reasons out there. One may be okay. Imagine I look at my friend. Their stock returns are at 10%. Then they look at endowment. By the end of 15 or 20 years, I will get 3 or 2.5%.
Yeah.
So they'll be thinking, am I getting the short end of the stick?
Okay. So if that's the case, if this is the first scenario, what would you advise?
Okay. We will actually talk with them. Ask them, do they really need to surrender because they are under financial needs? For example, they may have mortgage payments they are lacking behind, or they have debts that they took on and could not service any longer. So if that's the case, it's a legitimate reason for us to take over. But if it's just like, I saw my friend 10%, this one 2%, I'm getting the short end of the stick, we would actually advise them to look at the opportunity cost. Basically to see, let's say for now, let's say I have 10,000 and every month I put $500 into something.
Correct.
versus into stocks and shares, let's say, or to put in the endowment. So you need to understand, if I give up, because I already paid 15 or 20,000,
Yes.
so I only get back 10,000.
Correct.
So in order to get the maturity of the endowment, let's say for here, so how much, what is the interest rate that I need to beat to get back whatever I would get if I continue with the policy?
Okay. Yeah. So I think that's where many people fail to see, right?
Yes.
Many people think like, oh yeah, I've already put in the 15,000, then they think like, oh, they already lost the 15,000. It feels like a loss to them, but they don't think much about the future.
Yes, correct.
Of the policy. So that is the first scenario. Is there any other scenarios that people come to sell the policy to you or want to let go?
Those are very rare, but one is, let's say they are having a divorce case.
Okay.
And they are trying to split the assets, but it's very difficult to split the assets, right? So
Assets as in, that means they have a policy that are joint. It's a joint policy.
it can be a joint policy, or it can be for their children.
Okay.
So it will be a case of who should hold it.
Okay.
How should we resolve this? Should we liquidate it so that we have cash and just split 50-50? So these are some of the concerns that they do have also.
Or just continue and then they continue to contribute to the policy to
Yes,
maturity
but if they don't trust each other, then if trust break down, then they will definitely want to sell lah. No choice.
Have you got that kind of case before?
Not for now. But these are the scenarios that
You've seen lah. You've seen
we
before
have
lah.
seen before.
Okay.
So they just surrender the policy.